I remember a quotation from one of the chairman for a Hong Kong-based industrial company in China. When I visited them, this is probably going back 15 years ago. He said something very odd to me at the time. Don't waste a good recession. And it was a very simple sentence, but it encompassed so much wisdom that every time there's a downtrend in the industry, they are in a very basic commoditized business. But every time there's a downturn, they figure out how to edge over their cost structure, their efficiency, maybe their production time to be that little bit better. So that every downturn, some of the competitors goes away. And then bit by bit, they become the largest player in the world. So it encompasses that all of those sentences in the one sentence. Don't waste a good recession.
Welcome to the CoCoon podcast. My name is Erica, managing partner at CoCoon Ignite Ventures. Together with my two other managing partners at the fund, Theodore and Roland, we invite you to tune in here, where you will find conversations we have with founders and investors on the future and sustainability of work. We have been talking and listening to founders and investors in Silicon Valley, Southeast Asia, Greater Bay Area, and the One Belt region for over a decade. There's so much to learn through venture capital conversations, and we decided to turn these meetings into a podcast to demystify what actually happens on the ground. If you're inspired by these stories and want to work or collaborate with any of our founders or investors, then our call to action is reach out by searching for CoCoon Born to Fly on LinkedIn. We'd love to connect there.
Once again, thank you very much for joining us. Eric has been a passionate investor for over 30 years. He's the Chief Investment Officer of Buena Vista Fund Management, has been with the firm since he started the Hong Kong office in 2002. I mean, we've been friends for quite a few years. Once again, thank you for your support of CoCoon. And I know that you make a lot of technology investments. Last time when we met in person, we're sharing. You were looking deeply into a lot of the Web3 goggles, these glasses, and you've actually tested out all of them. So all this like technology. I'm getting involved in a lot of these technology investments. Is that also related to your interest in the engineering behind a lot of these companies?
It's simpler than that. It's more like I have less phobia or less resistance in trying out something else. So if you take maybe the average person, whenever they come across a new unknown, the natural thing is, say, oh, I don't know about this, and step back. My personality and my training is more like, oh, I don't know about this, let me find out more. So that attitude of kind of leaning forward against stepping back is an important one, that some people are just more adventurous. And I would encourage all of your audience, all of the young entrepreneurs to be more adventurous. You got to have that right attitude to conquer the fear of unknown. And once you do that, then you can figure out that most knowledge you can actually acquire. Some longer than the others, but nothing is that hard to master. And all you have to do is admit that you are students and start from the ground up. So I was that way. I remember I had this discussion with the IR of the leading manufacturer of the VR goggles space in the world, and he kind of said, "Oh, so you don't know much about the VR industry at all by the time of it?" I said, "Absolutely, this is my first call, and I know about this. I don't know how the rest are all linked together." And we had this very engaging dialogue, and I would say by now, in going through most of the investor call, I'm probably better than the average investor in terms of the knowledge, but that certainly wasn't the case a year ago. So it's all about whether you are passionate to learn and figure out what are the critical elements in this particular industry, and learn how to tell what is a job well done, what is a mediocre job, and how do you optimize on that particular parameters. For example, is it in VR goggles, is it the thickness, is it the lens design? Is it battery life? Is it the comfort of being able to combine the unseen external world with the virtual world? So there's a lot of soft aspects that you need to understand one by one, and then figure out how company A is doing better than company B. And then you can say, then if that's my understanding, then company A should naturally win out. So it's really about enjoying that, kind of like a chess game. You got to figure out what are different pressure spots and then address those pressure spots separately.
So investment for you is a chess game. It's a strategy game, and you get to learn on the go. And definitely, this excites you as you engage new problems. You see, there are these are things that you may not know, but you are interested to find out more. So that's your approach.
That's one side of it. The other side of it is that give me another job that you can think of where I can get to meet top-notch people from all over the world, and learn valuable lessons from all of them. I remember a quotation from one of the chairman for a Hong Kong-based industrial company in China. When I visited them, this is probably going back 15 years ago, he said something very odd to me at the time: "Don't waste a good recession." And it was a very simple sentence, but it encompassed so much wisdom that every time there's a downtrend in the industry, they are in a very basic, commoditized business. But every time there's a downturn, they figure out how to edge over their cost structure, their efficiency, maybe their production time, to be that little bit better. So that every downturn, some of the competitors goes away. And then bit by bit, they become the largest player in the world. So it encompasses that all of those sentences in the one sentence. Don't waste a good recessions. Downturn opportunities comes with that risk, because just like what we're seeing in tech today, there are so many companies being decimated, but whoever's surviving would end up having a larger play to themselves.
Yes, and this segues really well to an article that I came across 2 weeks ago. I've just mentioned to the audience, it's an article that I read in the information titled "Welcome to the E-commerce Winter." It's by Michael DiStefano and Malik Morris. And I'll just quickly mention a brief summary, and then we'll continue with the discussion. So what happened is that most people think about crypto winter, but what's worse is the e-commerce winter. The expectations that investors and founders of consumers switching to e-commerce permanently after the pandemic it's just not panning out. Everything is kind of like switching back. People are going online, and now they're all going back offline. And not to mention there's runaway inflation, and equity investors are pulling back on all their investments. So that's a I guess 2-sentence summary of the article. It's a very good article. Highly recommend people to check it out. And as soon as I finished reading this article, I first person that came to mind is Eric. I was like, I'm going to send this to Eric, and I want to see what he was thinking. And you just mentioned, don't waste a good recession. What are the dangers, what are the opportunities in this e-commerce winter, given you also exposed, I believe your portfolio, you have quite a few portfolio companies in the technology sector and definitely in the e-commerce sector. What do you think about all of this, and how do we not waste this recession?
We might have talked a lot about tech in our years of social interactions, but our actual exposure to tech was actually fairly modest in a portfolio sense, until the Chinese regulatory landscape become a lot more challenging, and the valuations of many of these companies started to kind of fall off the sky. The risk reward become right for us for many of these companies over the past 18 months. So we become a lot heavier in tech, maybe more like the last 6 to 9 months than we've been in the previous years. And to segue back to what you said earlier about the opportunity and risk, the the sharp decline in terms of tech share price basically shut down the exit opportunity for many of the PE funds. And that, basically valuation no longer as attractive, and the window of listing may or may not be there if the company is not able to demonstrate a pathway to profitability. So that makes the exit window and the exit reward far more uncertain for PE funds. And in response to that, PE funds become a lot more selective on who to back, how much to back, and how much longer are they willing to tolerate losses. That is a key distinction to the previous decade of mindset of finding some way to disrupt the incumbents, build market share, lose money to win the battle over the long term. That's a kind of complete reversal of mindset. So when you take that mindset shift and look at existing players and landscape, it would come out with interesting opportunities. For example, I was quite shocked to find out that Shopee, being a fairly dominant e-commerce player across Southeast Asia, they got into Brazil about 3 years ago. 6 months ago, in the middle of all of this kind of gloom and doom recession talk, they raised their take rate from 6% to 10% in Brazil. Now, 6% to 10% is still not going to be enough to cover all of their last mile costs and the admin costs, but it's closer to break even. And they're able to do that with basically no meaningful retaliation from any of the other players. So if you look at this, is an opportunity for companies that have the staying power to edge back towards profitability rather than stay kind of deeper and deeper into fight into the red. So Shopee is kind of one good example. They are able to, for example, shut down their stores in India, Spain, and France to focus on their growth in Brazil plus the ASEAN 6 countries that they are already operating in. So that means their cash burn will be lower, and their pathway to break even is going to be more accelerated. Share price is down 80%, just like many of the other tech companies. So risk reward is whether you have confidence on whether they can hit the break even in 2 years. Yeah. These are the kind of opportunities that we see. You see the same kind of thing with many other companies. For example, if you look at Tencent or if you look at Alibaba, both of them have dramatically scaled back what they call new initiatives, or the kind of previously money-losing new divisions. Both Alibaba and Tencent have talked about, I forgot the official term they use, but basically is to cut out all the unprofitable customers that they acquire in the market share fighting era. So they are basically, they're optimizing their portfolio for more profitable customers.
Oh, yeah, this is very interesting. What you mentioned about the insight is that given the collapse of the valuations, that's actually incentivizing PEs to get to pump up these valuations because they can't exit. I mean, they can't exit in a crazy way. So that in turn leads to companies with staying power to up their margins, since their competitors are literally dying or falling out of the competition. And in turn, actually, those companies become more profitable. Wow, this is a very, very, very interesting insight in terms of the consequences of a sudden valuation adjustment and how the market is, in a way, doing what it's supposed to do, allow those who are better to so-called have more access to the market, and those who and also more profit. Otherwise, I mean, back in the days when there's super high valuation, people are just acquiring customers left and right, even if they're making a loss. And now you're saying the giants are deciding to not even serve the loss-making customers. I think that's very interesting. So I mean, if you're buying them at 80% discount from its peak, that should be a pretty good. It's a bargain. Would you say it's a bargain?
It's a better risk reward. I mean, many of these companies still have to make it to the black, right? But there are other companies that are already in the black that are being sold off. So you can just look at them individually and assess the profitable part against the loss-making part, and it tilt more towards the profitable side. How does that do to your valuations? It's all about the free cash flow that you can extract out. If the losing side is being kind of moderated, then the free cash flows improve. There's one more layer that I want to take it above what we just discussed. Beyond just cutting back on the loss-making initiative, there's also opportunity of morphing the landscape. If you recall, over the past 3 years, there's been a lot of very bloody war in the community group buy segment in China. Many of the PE funds were piling a lot of cash to burn. And I mean, forget operating margins. Many of them were on negative markups, on negative gross margins. And so with that behavioral change, many of those smaller players begin to run out of money and die. But at the same time, the leader, Meituan, actually have shifted their strategy slightly. Instead of just looking at community group buy as a subsidized business across the nations, they look at some of the largest cities and says, we can take the kind of like a Panda Mart model rather than a community group buy model. I can provide a online convenience stores. Then suddenly you switch from community group buy, kind of large volume household SKUs, to selling kind of stuff that people would buy and pay for convenience. And so in Beijing, Shanghai, they've shifted a lot of this effort from delivering carrots and onions into delivering soft drinks, into delivering ready-to-consume items. And that part goes from a very low gross margin to a much higher gross margin. So the business model also getting morphed as everybody kind of wake up from that market share grab mentality and says, what do people in Beijing really want? What do people in Shanghai really want? What do they care? Oh, they want 15 minutes delivery time. Pricing, less sensitive. What do people in the 6th-tier city want? They have all the time in the world. They might actually want more selection, and they might care less about delivery time being an hour or 2 hours. So you optimize your delivery network to try to cater for different segments and morph your margin accordingly. So that's again, you might not have this type of rational segmentations if everyone's just going for market share grab.
Yes, that's true. And I think what you mentioned about the landscape is morphing, it's changing. And to a great degree, I mean, you've got to be more personalized. You've got to really know your customers and find ways to deliver more value, whereby you'll be rewarded by a larger margin. So this, I mean, kind of going back to like what you mentioned about the recession, is the time when companies can get more margin, but you've got to really look into what your customers are willing to pay for, and convenience.
Margin comes last normally. So what you start off with, how to better serve the customer. What are the pain points that you can address, and hopefully, if you can address that better than your competitor, and your competitor goes out of business, then the landscape would tilt in your favor. And once the macro conditions improve, your margin will expand naturally. So your margin expansion doesn't happen during the recession, but the scene is set while your competitors are withering away during the recession.
Actually, along these lines, I was also thinking about this part of serving better serve your customers, which leads to various options in terms of getting more margin, and you get to stay in business. And to a certain extent, that's actually about increasing productivity. And I was just wondering how you think about this, because you look at businesses, you look at the business models, the value creation, the profitability, etc. But in essence, it's also you're considering the productivity of the people in these companies. So the productive people in these companies, make their respective companies profitable. So
Yep.
In a way, I think this connects more to our CoCoon audience, where most people are affiliated with some kind of product or service business. So along these lines, do you think there are any fundamental changes in how productive people work? Or do you have any views in general, like the future of work?
This is the hotly debated subject. I don't have conclusion yet. I have
Observations.
I have different trends. I'm for example, the whole idea about going to the office, commuting kind of back and forth from your home to your office, sticking to a specific set of working hours, all of those things were being thrown out the window during the last few years of COVID environment. And many of us have got used to working more flexible hours, working from home, having kind of set up in place so that if you have to do something a bit more formal at home, you can still kind of take the meetings in the comfort of your own home. And once you get used to dispensing with the commuting time and having more frequent but smaller kind of bite-sized interaction away from the office, that has major ramifications of how town centers are organized. Whether the infrastructure that we have today is still required in terms of having such a large-scale office block, such a large, let's say, public infrastructures and parking facilities. All of those existing business model are being challenged when you have, let's say, X% of your staff are happy to work from home for some fraction of their time. Then your total office space might be a chunk less than what you have been paying for. You might have a different need for IT infrastructures to be able to cater with all the security checkings, remote support environment. So that gives rise to a rethinking about, to give a more painful example. If you think about Grade A office as a office investment in Hong Kong, it has been kind of a one-way game for a long time. If we start thinking about office demand under the framework that I just described in the last 2 minutes, coupled with the extended quarantine requirement in Hong Kong, pressuring the MNC to reconsider their role in Hong Kong, you can actually paint a far more grim picture if office vacancy rate continue to increase. At some point, somebody would break ranks and start doing rent discounting, and your $80, $90, $100 office rent in prime locations can fall very far. In the last down cycle in the Asian crisis, we went from $140 to $8. I'm not saying this is the same type of magnitude here, but we had the same type of ingredient to fundamentally disrupt the supply demand. When you have full occupancy, landlord can basically ask for whatever they want. But when you already have low teens vacancy and still rising, it could be a very different picture. So all of us have to start thinking about how does the post-pandemic work habit going to impact the service industry, impact office part, how to impact IT support.
Yes.
And way down the road, whether some sort of mixed reality augmentation might be able to come into play. We have got so used to Zoom now. If we can easily add a 3D equivalent of Zoom and do kind of virtual meeting in a virtual room while feeling that we're actually inside a room, that might actually help engagement better. One of the big negative on Zoom is that if you are in a large Zoom meeting, it's quite easy to feel disengaged and just drop off. But if you are in a 3D environment where everybody can see each other in a virtual avatar format, then it's far easier to stay engaged when everybody is virtually looking at you.
I mean, we've all been spending a lot more time on Zoom, and I must say I really enjoy the convenience, especially these one-on-one meetings. They're still pretty good. I mean, not as good as if we were to meet up over coffee, but when we go to like much larger settings, it's very easy to have multiple windows open on your desktop, and hence the engagement is reduced. And if there are meetings where people can turn off the cameras, essentially, I mean, you're not even sure if they're around, which I think is does impact to a certain extent the productivity and the engagement, the alignment of these within these companies. And at the same time, I think I'm trying to connect the dots of what you just said, and also with what we were discussing, that with there's a lot of reorganization going on. There's like, you mentioned about office, especially grade A, maybe they don't need to be that expensive. People don't need such large footprints. And at the same time, we really need to ask these questions. Why do we have these things? From, the legacy reasons, or can we actually change for something better? In a way, it connects with what you mentioned about a lot of these group buy platforms, Meituan, and they started asking about, wait, what do these cities want? What do people in this district want? So in a way, I see there might be like a common theme going on, is that with data, can we be more accurate? With data, can we be a bit more, precise in terms of delivering the convenience that people are looking for? At the same time, we are looking for convenience because to a great degree, we've been restricted. We can't go to office, or now we have to make do with whatever we've got right now. So I'm willing to pay for a bit more convenience, because in all the aspects of my life, there's a lot of inconvenience that's been taken away from me, or selection. I no longer have that kind of selection. So in a way, do you think this is a coincidence that all these things collide, or do you see this is actually going to evolve into another trend where it's all a matter of precision?
I'm on the more optimistic side. We have a lot of internal debate about this. Is food delivery or is e-commerce basically just a cannibalization of the offline, or is it actually adding? And my take, I've been in 4 quarantines over the last 2 years. So during those time, I've formed new habits. My friends that have gone through similar experience have formed new habits. And once you get used to the idea that if I want a beer at 10:30 at night, and for $10 extra, somebody would drop it at my doorsteps, it's pretty hard to kind of go back to say, I gotta wait until tomorrow morning and drive to the supermarket and buy myself a beer.
Yes.
Once you get those habits, or I feel like staying in the office to do a bit more work, I'm too lazy to go out for lunch, let me just call one of the delivery platform and send me a burger. Once you get used to that, does it cannibalize? I think this is more like consumption increases. I might not have gone out and ordered as much stuff. I certainly might have been more price sensitive if I were going out than I am behaving in a more kind of a lazy setting. Similarly, I've discovered that my colleagues have gone off one step further. Instead of just going on Deliveroo or Foodpanda, they've gone on to other higher end restaurants to get stuff that they normally wouldn't be able to make a booking easily. Now they're on their own delivery platforms. Great, one more option. So I'm seeing this as an expansion of channel to extract consumer dollars rather than as a cannibalization trend. The other thing is, for example, Zoom. Zoom is I'm on a pay account because I don't want to have a 40 minutes limitations. But
yes.
take this one step further. I'm prepared to pay for Zoom just for a higher quality and more stable connections, right? Versus the other platform. Imagine you ask yourself, if you and I can be in a virtual room where I can illustrate my thoughts in a virtual whiteboard that I'm kind of sketching out my diagrams or my illustration, how much easier would it be for me to explain, let's say, one of my investment thesis on one of the company? If I can draw live in front of you and you can observe that on the whiteboard, would you pay another $100 a year for that service? Probably, I would probably do that.
Of course, I would. I'll definitely pay more just for that experience.
Exactly. So whether it's Zoom or whether it is Matter kind of selling some of this stuff, there is a service revenue that we would pay extra over what we're willing to pay now. When FaceTime is free, when WhatsApp call is free, but there's stability issue, there's work flexibility issue. By the time you look at this account, you're actually expanding the market into segmentation of maybe higher function, higher output segments, mass markets, and maybe a free segment. So you are turning what used to be a kind of a service that people take for granted and accept whatever limitation they do. Now, who want to use other inferior platform when Zoom is more stable? And yes, when there's a next thing coming along, it will be an easy transition. So I see this pandemic as net a positive for us to expand our habit and expand our potential way to spend money, rather than cannibalizing what was the old economy before the pandemic.
Yes. This is a very, very good insight to this, and I think a key word that you highlighted is change of habits. Habits being something that it's hard to get us started, but as soon as we switch, you mentioned about buying a beer, like at the moment, having someone deliver. Yes, it's extra $10. I mean, for our context, maybe $10 Hong Kong is acceptable. $1.50 US, it's acceptable. And I think, and also about access to things that you normally may not have considered, because even say for luxury products or like the luxury restaurants, they would never consider any form of take home or delivery up until they have no customers in the restaurants.
Yep.
So suddenly people who have never had this access or never thought they would actually go for these restaurants, now it's on their app, the Deliveroo or whatever, Foodpanda, and you just click on it. So let's give it a try. Like how does this dish actually taste? Even though I know it's going to be not as good since it's a takeout, but at least I have an idea, I have access. It opens up all these new opportunities, which I mean, in my line of business, I also see that these are the new habits changing through what we're working on and one of companies, Empower. We see that a lot of customers are very happy to make online purchases, but they want to talk to someone online at their convenience, say 11 p.m., midnight. That's when we actually have time, sit back, relax, the kids are in bed, we're able to do some shopping. And how is it possible to kind of go back to like, the shop's going to be open like tomorrow 11 until like 7 or 8 p.m. Like come to a store and I'll tell you what we've got, versus I go on my social media or WhatsApp. I just want to click on a button and talk to someone, talk to a product expert, and that person is going to respond and give me the images and the prices and make me feel like, I already know what I'm going to buy. So it's the barrier of entry of entering a store is significantly lowered. And I think this is the kind of habit. I mean, we started off with maybe buying stuff from Amazon and HKTV Mall, but as our habits continue, we are more happy, we feel a lot more comfortable expanding our range, which I very much agree with what you've described. And I think you highlighted a key thing, is that habit, and COVID giving us adequate time for us to develop certain habits. And I think that's very, very important. Along these lines of like new things and changing habits, just curious, have you tested out any like crypto investments? Any thoughts along those lines?
Not yet. I've looked into mining costs and supply constraints of Bitcoin as Bitcoin was falling through.
Yes, because
I've
that's
looked
another
at,
like 80%, down 70 to 80% could
Yep.
could meet your threshold in terms of
well,
this is the
from
risk reward.
from what I mean, the mining cost is still reasonably stable in Bitcoin, and below a certain price level, around about 20,000, mining become not profitable for the mining machines. So there's a natural kind of cyclical force to adjust that balance. Whereas for many of the other crypto that are not backed by this type of algorithms, there's no real supply demand reset.
Yes.
So that's kind of one way. The other thing that I've been learning about is really this whole new play to earn games area where people in certain countries are incentivized to play and make their NFTs and be able to trade those NFT in the games to other people.
Yes.
So that ecosystem is fairly new. Could potentially again, instead of mining, you just have someone spending their human hours doing something to earn a particular product and then reset it to someone else. So it's a similar principle. So those are the interesting things on crypto that I'm trying to navigate my way through. I haven't made any investments in crypto yet.
Yes.
But the I would say maybe an easier call is that still a kind of a work in progress, is that instead of trying to figure out which cryptocurrency or which metaverse would end up winning it all, I'm spending more time looking at maybe if Unity or Unreal, they are the two dominant engines to make all of this virtual environment. If they can figure out an NFT standard, so everyone that makes their games based on Unity would be able to have portability across multi-platform on the NFT, that might be a bigger upside. Right now, we haven't heard that from Unity, but if there's a natural point of kind of forming a standard at the engine level, would be kind of one way of making this easier. We'll see whether they get around to it.
This is like the gold rush in California. You're not sure where you're going to find the biggest gold nugget, but maybe you can help supply the shovels. And I remember, I mean, Levi's is born out of gold rush, and also maybe build a railroad there. I mean, people still need supplies in order to go do their gold rush and gold digging. And sorry, you were about to add. Please continue.
Yeah, there's another spectrum of this type of gold rush or democratizations of e-commerce. In the old days, we've been thinking about the dominant platform, your Amazon, your other 3P platforms, Shopee and whatever else. What we are seeing might actually be kind of a new way, similar to what I think we discussed maybe a year ago on what Empower is doing, using a WhatsApp interface so that you have an auto integration between your online presence and your offline presence, right? I recently started doing some courses and discover how easy it is to link my kind of Python-based environments into WhatsApp or into WeChat or Telegrams. The APIs are very straightforward, so it makes even the smaller seller able to have this kind of a WhatsApp or messenger-based interface, being affordable, being there, and kind of at the user level. Not everybody wants to download an app, but if I can scan a QR code, get into WhatsApp and order something fairly quickly or check out something fairly quickly and have someone that give a humanoid response on the other side, all that can be done in a script in a few lines. It's really not that difficult. That means many of the unorganized vendor have an opportunity to have an online presence without being taxed heavily by the platform.
Yes, absolutely.
That's a new thing that I'm kind of excited into to see how that evolve over time.
Yes, and this is a field like where you mentioned Empower again. I mean, what we've been working on is this chat commerce, and I think it's also a matter of using what you've shared with us, the habits that people are forming, and how it's so hard to move from something that's easy back to something that's actually hard. It's so easy to send a text. It's so easy to receive a text. I don't need to download an app, and you can have a humanoid, chatbots or so, or you actually have a human being on the other end who's eager to give you the answers that you need. And it's literally at the tip of, it's not just tip of your tongue now, it's the tip of your fingertips to just type it in and get responses. And not worry about not getting the kind of expert information that you want to have. Because these days, even searching online requires effort in figuring out which keywords to actually use. Yep. Because why do some people feel that, the youngsters kind of understand how to search online better than the older people? It's all a matter of the use of words. But with human language, with chat, with actually having someone else, another human on the other end, it's just a lot easier. And I think that aspect is ever evolving, where people want to use fewer calories to do more work, to get more done in that sense. And I think enabling more of this actually also enables a lot of small players to stay relevant, because their relevance at the end of the day, in my view, is that they are the real content contributors to the network. Because they have the knowledge, they have the product, or they have the necessary information and also the service required to answer those questions. And they should be part of they should also earn and benefit from this internet, hence the productivity aspect, increase productivity.
When we spoke to some of the kind of multi-country seller of a Shopee platform, the things that they highlight to us was that a good platform is able to tap to my backend systems, translate all my SKUs into nicely presented web pages or app layouts, have all my description translate into different languages, and sync up all my price globally, so that I don't have to do anything. If I want to sell in 15 countries, the platform handle everything for me on currency collections, multi-currency support on payment platforms, all my kind of SKU updates, and hopefully soon Tencent will announce in their one core results that they're going to be providing live chat features. As a merchant, not only are your kind of SKU management now become a fairly automated task, even your CRM functions can become a fairly automated task. You just really need to have your experts on the other end of the line. All the other IT is already outsourced. It makes a small merchant a lot more functional to become a digital merchant. In the old days, just think about having to develop your own platforms, build your own chatbot, build your own chat-based systems, have your own app approved by the app source. There's a lot of roadblocks to clear. Yes. We are kind of getting away from that now.
Yeah, you need a lot of specialty, various types of specialties. And given these days, I think across multiple industries, we all have various shortfall in manpower. Hiring, not to mention, hiring IT is very difficult. Nowadays, I think just hiring anyone to do any form of service is difficult. And I think this actually in turn benefits a lot of the smaller players when they themselves are owners. They have the motivation to work, and being part of these networks and platforms gives you a lot more access, or brings you to the, I guess, same, more level playing field. I think that is where a lot of these large platform players may gain more traction than the other platform, other systems.
Yep.
More in-house or more exclusive systems. That's where
it's not just the front end. I mean, the front end we talk about in terms of CRM, inventory management. We own a company in Australia called Zero, and they are doing the same thing for backend, right? So imagine if I have to do all
We're using Zero too. We're using Zero.
Perfect.
It's a great company.
So exactly. So you know exactly what I mean. It allows all the accounting stuff to be real time. It saves you on a lot of dedicated accounting resources in-house, and it reconciles all your statements, pay your bills for you. So that type of productivity gain in the back end is also highly conducive for smaller operators to go online.
Yes, absolutely. Productivity. In a way with more tougher competition. I mean, given what you mentioned earlier, that a lot of these companies are now they have low valuations, so everyone needs to be profitable, and you have to drive higher margins. So naturally, your customers will be asking, "Are you giving me better service?" And you have to increase the ante. You've got to increase the kind of your service standard. Bottom line is, you still need to stay nimble. So you need to cut costs in other places. It used to be a 5-person back-end team. Now you have to bring it down to 3 people. That's just how things going to work out. And in a way, that also consolidates, I guess, decision-making capabilities. In a way, also ownership, it needs to be consolidated. And that's also in turn allow faster and more precise decisions to be made. That increases productivity, and companies become ever more profitable. But majority of them are likely going to be small, unless you're a platform player. So then the platforms are helping people make money in that sense.
I mean, isn't it exciting to be able to see that? Imagine for the community of small sellers, historically they are bound by the geographical neighborhood of their physical stores.
Yes.
Being able to enable them to sell to a much larger audience and resolve a lot of the cross-border difficulties, that actually brings a lot of opportunities for small merchants globally.
Yes.
It's a big step.
So one last question before I let you go.
Sure.
Actually, also along these lines. So what's the favorite part of your job? Just that you did mention a little bit about like learning new things, but aside from that, what's the favorite part of your job as an investor?
There are 2 parts. There's a part that I wish I can get more of as a kind of a perks to the job, and there's a second part that is the kind of a day-to-day enjoyment, kind of like enjoying coffee, the equivalent. The first part is I have been very privileged to be able to attend a lot of live events and meet up with some very important business figureheads, political leaders, top strategists in various fields in my line of work. And those, when you're able to, I was in the audience listening to Madeleine Albright, Henry Kissinger's give live speeches, and to kind of have a glimpse of their mind and how their mind works. It is absolutely, it's absolutely addictive just to be able to see this is how a master going through their particular game and how they dissect the game pieces. So that part, I wish there's more opportunity. There's never enough. It's very addictive.
And you mentioned the second part is like coffee.
It's like coffee. So the second part is more like day to day. I'm learning about new businesses, and with new businesses, there's always a learning curve on a new skill, on a new industry. Maybe the regulatory landscape is uncertain. Maybe the competitive landscape is uncertain. There's always going to be some mystery that you have to solve. before you can come to a conclusion that, oh, I'm going to back this particular investment. So that part is like playing a puzzle. You enjoy cracking all the different pieces. You might not crack it every single time, but when you crack it, the satisfaction come from that project achievement. It's like enjoying a good coffee, and you do that on a daily basis. So that part is the daily reward.
Well, that's amazing. I mean, you have daily rewards, and at the same time, you also get to learn throughout your career. So once again, thank you very much, Eric, for sharing, for taking the time to share with us your thoughts and some of your investment strategies. And I look forward to chatting with you again.
Hey, thank you for listening today. If you like what you heard, don't forget to subscribe to hear more from entrepreneurs and investors on why they got started, how they got through the hard parts, and what they'll be doing next. If you're inspired by these stories and want to work or collaborate with any of our founders or investors, reach out by searching for CoCoon Born to Fly on LinkedIn. We'd love to connect there. Download more episodes or subscribe via Spotify or YouTube.